Kirill Dmitriev, who is the CEO of the RDIF. We're taking a short break. US futures are sinking. Fresh concerns, of course, surrounding the Omicron variant, continuing to rattle markets. We'll have more next.
Good morning, guys. Like I said, in Asia, I said we're looking to short NQ, Nasdaq 100, and we got about 200 point down, and now I'm in gold trade, short. Usually when US market go down, usually gold go higher, and everything start going higher now on Nasdaq. US market start going higher. That's why the oil is going down, the gold is going down. You can see the US market start going higher.
The Nikkei sinks into the red in the final hour, and US futures turn negative after Moderna CEO Stefan Bancel questions the power of vaccines against the new Omicron variant.
Given the large number of mutations, it is highly possible that the efficacy of the vaccine, all of them, is going down.
Oil prices also dip, while the US's energy envoy tells CNBC the Biden administration is ready to release more reserves if needed.
We wanted to do something that was impactful for the market and that also had the ability and the flexibility to allow us to do that again should the need arise for the American economy.
The United Kingdom rolling out booster jabs to anyone over 18 years old as it looks to prevent a wave of Omicron infections, whilst US President Joe Biden rules out another lockdown for now and warns curbs on travel won't be enough to stop the spread.
While we have that travel restrictions can slow the speed of Omicron, it cannot prevent it. But here's what it does. It gives us time. It gives us time to take more actions, to move quicker.
Volvo Cars posts a 17% fall in sales in the third quarter amid pandemic-induced supply shortages, but the CEO, Håkan Samuelsson, telling this show production is picking up.
Production losses will go through all the way to the retailers, but it is an improving trend, so that's positive. But that's, of course, subject to what could happen with this new virus variant.
Welcome, everybody. Let's have a look at the full year picture for SAS, the Scandinavian airline group. The fourth quarter numbers then come to us with the headline, year-end results burdened by the pandemic. In terms of the raw numbers they've delivered here, fourth quarter revenue in at 5.7 billion, the net income a negative 744 million Swedish krona, the pre-tax profit a negative 945 million Swedish krona. The company then giving us an earnings per share number of negative 0.12 Swedish krona. The company says we are starting operation of SAS Connect during the year and to open bases in Stockholm and Oslo during the year, evaluating fleet options to handle thinner flows of passengers in our network. We have now had a positive operating cash flow during 2 consecutive quarters. At the end of the quarter, in terms of liquidity, the cash position sitting at 4.3 billion Swedish krona, similar to the cash position of 4.4 billion Swedish krona at the end of the third quarter. Underlying demand is healthy once restrictions are lifted, both for business and leisure travel. The short-term effect of recent developments needs to be fully analysed. So a fourth quarter net loss in at 744 million, with cost reduction still very much the focus as this airline company continues to be roiled ultimately by the decisions that are being made around COVID.
Have you looked at travel costs going forward?
As a passenger?
Yeah.
Yes.
They are extraordinary. I've looked at ferry costs, thinking about France. I've looked at flights back and forth from Scandinavia, funnily enough, and elsewhere. And prices are fruity, to say the least.
Fruity meaning high.
Meaning, yeah, they're a bit right. Yeah. You've got a bit of a tease before I go.
Well, I should tell you, actually, we have more on SAS's numbers later this hour. We'll catch up with the CEO, Anko van der Werf. That interview coming up later.
I've got numbers out from EasyJet as well, but I guess the key line for me is the line they can't give us. And it's like what you were saying with SAS as well. It would not be appropriate to provide any further financial guidance for 2022 financial year. And that is it. That is exactly what we're saying. With current developments, they just can't give us further guidance for 2022. There's loads in there, don't get me wrong. First quarter loads expected to be over 80%. Second quarter capacity is expected to be circa 70% of 2019 levels. But this is all caterers paribus. This is all other things being equal. Now, look, we've seen an increase in transfers, some softening of trading for the first quarter. That is, of course, because concerns about Omicron. Based on current travel restrictions in markets in which we operate, EasyJet expects to fly circa 65% of 2019 levels in the first quarter. Too soon to say what impact Omicron will have on European travel. They've got 118 aircraft on order, with a further 59 purchase options and rights confirmed to further build on this year to come. We remain mindful that many uncertainties remain as we navigate winter. We see a unique opportunity for EasyJet to win customers and make market share. For instance, I'll give you an example of that. Even in my own little world, I'm thinking 1, 2, 4, 5, 10 flights to and from Sedgwick Towers are due over the holiday period as well, from friends and family, what have you. Yes. None of those could happen as well. Now, if you multiply that across the whole of Europe and the world as well, we're talking about a devastating loss of revenue if indeed Omicron continues to expand. Yeah, and the rules seem to be changing very rapidly as well, don't they? Now we have face masks back on in certain circumstances here in the UK, and ultimately a PCR test when you come back into the country. Which adds enormous amount of cost if you can get hold of that test as well. Yeah, absolutely. Moving on, US futures negative in the past hour after Moderna's CEO, Stefan Bancel, raised concerns about the efficacy of vaccines against the new Omicron COVID variant. We've sat around the 390-point drop for the last half an hour. We were down more than that earlier on, but we seem to be settling around this level. But we'll keep an eye on the market sentiment, obviously, as we come into the European Open. As Steve was pointing out to you earlier, I think we were negative across most of the Asian session.
but it wasn't panic selling by any means. It was a measured sell down.
I don't think we've seen any panic selling, by the way. And I know we've got things to move on to, but I want to get that out there because I hate headlines that say panic when there isn't panic. There are sometimes there panic. Yeah. When we had the April expiry of the oil price last year, WTI, that was clearly panic. That was extreme panic. But there's too many glib uses of that word and glib uses of the word crash as well. So I think it's really our responsibility to take that word out until we see it.
Speaking to CNBC, he said it would take time to be sure.
What is the impact of this new variant on the vaccine efficacy? And we should know that in around 2 weeks. Given the large number of mutations, it is highly possible that the efficacy of the vaccine, all of them, is going down. But we need to wait for the data to know if this is true and how much is it going down.
Well, let's get out to Matt, who is with us now from Singapore, and can tell us a little bit more about how the Asian markets have traded.
Hi there, Jeff. Hi there, Steve. Yeah, markets moving south on the back of these headlines out from the Moderna CEO, of course, quoted in the Financial Times about the efficacy of the vaccines against this latest variant or strain. Some patches of green that you're seeing, but these markets were closed before we started getting these headlines out from the boss of Moderna. Australia closing up. New Zealand closing up, the Taiwan market closing up as well. So we are decidedly red for those markets that have been exposed to these headlines and still, of course, trading throughout the course of the afternoon. Of course, I only got these headlines in about the last hour and a half or so. But let's show you some of the markets. South Korea down by about 2.4%, the Hong Kong market down by about 2%. But again, we saw a really swift turnaround for the Japanese market. We were trading in positive territory, of course, on the back of the stronger performance that we saw on Wall Street in the overnight session before we got these headlines. Money going into the Japanese yen right now at the 113 level. The Japanese market closing weaker by about 1.6%, 462 points weaker. Also some reports coming out of Japan by Kyoto that that country's now got its first case of the Omicron variant. So we'll await further confirmation out of Japanese authorities on that front. Weakness too across China as well, the greater China markets, in particular Hong Kong, down by about 2% or so. Remember that they've already confirmed a couple of cases there. The Shanghai market tracking pretty much flat as it closes as we speak. But the market had been in positive territory today on the back of that stronger than expected PMI print that we did get out for the month of November, but caught up, I guess, in this selling that we've seen across the region following, of course, the US and European futures picture that has deteriorated on these headlines. Airline stocks, you were just talking about the airline space. We are seeing weakness here. Singapore Airlines down by about 2%. Cathay Pacific in Hong Kong, 3.5% weaker. Japan Airlines actually closing higher, and Korean Airlines down only modestly as well by about 0.2%. But that is the picture here in Asia. Back to you now in London.
Thank you, Matthew. Very nice. Thank you very much indeed for that. Right, let's take a look at the Treasury yields, which are on the 10-year. This is the biggest benchmark you can find, really. Below the 150 level, of course. We were knocking on the door of 160 plus when we thought that rate hikes were intact, when we thought that inflationary pressures, whether they're transitory or not, were actually enough to mean that we have a swifter tightening over at the Federal Reserve and potentially elsewhere as well. That has abated now because of the new variant concern. So 147 is where the 10-year is trading. 112.75 is the 5-year paper on the 30-year, which, of course, we were above 2%. We're now down at 183.55. European futures, have we got the CAC on here? That's one I really want to look at. I didn't see that earlier. 1.3% lower. These are, again, they're not extreme moves to the downside. I would say they're very measured moves to the downside, which pretty much wiping out a lot of the gains we saw yesterday. But there are other economic issues out there as well, Jeff. We're not just looking at the COVID vaccine and what that means for markets.
Well, let's focus mostly on the COVID vaccine, though.
Okay, well, I might focus on something else as well when you finish.
You can do that, but I get to start with Simon.
Well, Simon French.
I'll ask my questions
Well, don't ask all the good questions.
Simon French joins us, Chief Economist at Panmure Gordon. Simon, nice to have you back with us here. Look, can you help us calibrate what do you think the likely impact is going to be of the new measures that have been introduced here in the UK so far?
Yeah, morning, Jeff. Morning, Steve. I think at this point, it's very, very difficult to look beyond the fourth quarter. So in the fourth quarter, probably 20, 30 basis points taken off what was always going to be a decent growth rate, probably 1.5%. We pare that back by 20, 30%, just from the fact that regardless what we find out in a couple of weeks' time in terms of the vaccine escaping properties of Omicron, or indeed the lack of natural or vaccine-induced immunity, I think consumers are going to take a bit of a cautious stance given the headlines, and therefore that is the sort of near-term impact. I think anything into 2022, and literally you are putting a finger in the air trying to work out which way the wind is blowing. There's nothing really in the epidemiological data that can allow you to make that kind of forecast with any degree of certainty.
So are we then doing ultimately what the markets seem to be doing fairly astutely, and that's looking at countries that have the lowest current vaccination rates or the lowest booster rates and selling down those markets more? I think it's notable that the DAX has been one of the poorer performers in this new variant-related sell-off.
That's certainly the geographical allocation. And I think that's a subtle difference from Q1 2020, when, of course, we didn't have anybody vaccinated. We didn't have any material natural immunity. But I think you're right to say that the market is voting at this particular point to say that there will be some residual immunity, and therefore those countries will be able to deal with it better in terms of their healthcare systems, the fatalities, the restrictions on activities, are going to be those who rolled out vaccines at a faster rate. I think if you were to get a geographically agnostic sell-off, that would be the market telling you effectively that there was no inherited advantage from having rolled out the vaccine against the previous variants quicker than any other country.
Simon, I will move it on because I think you've given it a good go, you two, on this one as well. And you are asking the question, which I think a lot of people are asking, where have all the workers gone? I don't know where they've got. Everyone I know, whether they're self-employed, they work for big companies, small companies, are working their working very, very hard, should I put it that way, at the moment as well. I don't know anyone who is economically active beforehand who isn't working even harder than they were before and during the pandemic.
Yeah, I mean, I don't want to sort of make any comment on the circles you move in, Steve. They're very good circles, of course. But if you just look at the Office for National Statistics data, it does suggest there's a missing 900,000 people, largely people of a rather older age, so towards the end of their working life, who you would intuitively think are still concerned about their healthcare outcomes in the workplace. So they've withdrawn their labour. It's a factor not just unique to the UK. We certainly see it in the US data, and it'll be one of the key metrics we get at the non-farm payrolls at the end of the week. But also younger people aged 16 to 24, an important pressure valve for the UK labour market. Consistent with every other recession we've ever modelled, younger people tend to spend a little bit longer in education when a recession hits, and those courses that they've taken on take a while to roll off and for their labour supply to come back. So I do think the data suggests that while it might not be your lived experience, there are almost 1 million workers, and that tallies not entirely one for one with the 1.1 million vacancies there are in the UK economy. So I suspect as those factors ease, you'll see some of the supply constraints start to ease.
Yeah, no, I thought you were relatively kind there, Simon. I thought you were going to say about me being one of those older workers, one of the few older workers who's still in employment. But I'll take that. Thank you, Simon. But in the States as well, there is this anticipation, seeing as we've got payroll week as well, that miraculously the participation rate is going to suddenly find a 62, 63 handle at some stage, and that will be the marker for more economic activity or a deeper jobs market as well. I just can't necessarily see that in the very short term. Have we got something systemic going on, something structural going on that means we're just not going to see mid-60s participation rate for years and years to come?
Yes, Steve, the compliment's going to keep coming, actually, because that's one of the best questions I've had on the labour market since I published the note. Why? Because actually, between 2000 and 2016, the US labour market structurally saw participation fall as a result of ageing demographics. But as the economy was run hot, whatever one thought of the Trump-Mnuchin economic approach, as the economy ran hot, that inverted, that started to pick up the US participation rate, contrary to what the CBO thought, contrary to what the Federal Reserve thought. And that has to call into question, I think we can all acknowledge the policy is being run pretty hot right now in the United States. Is there a reverse hysteresis, to sort of go back to the economics textbooks, a reverse scarring effect happening from running your economy hot that pulls back people back into the labour market? We're not going to know instantly, but I think it's enough of an open question to make it worth the gamble if you're trying to pursue maximum employment, which is the stated strategy of both the Treasury and the Federal Reserve.
Simon, let me take you back to this new variant, if I might, because we've got Jay Powell speaking today. There's testimony. We know there are some important end-of-year central bank meetings where the market had been pricing in rate hikes. What do we think now about the prospect of tighter monetary conditions into the end of the year here? Do the central bankers sit back and say, we'll wait and see what unfolds with the science, or do they push ahead anyway?
Yeah, I think let's start with the United States and maybe go around the world a little bit. So start with the US. I think the timescale laid out at the last FOMC in terms of the tapering through to midsummer will remain intact, certainly unless we get any definitive information before the next FOMC. And even if we do, I think there'll be that consumer caution that we were already seeing in the data, the pullback on consumer confidence, that won't really encourage the moderate core of the FOMC, if you like, to move at a faster pace. And then the timing comes for, you know, what the FOMC.
Okay. We close it was 500.04. You don't need to wait for me, guys, until when you see down tick, you can close, because by time I close and you may be missing $200. So if you see money, just take it. Don't wait for me. All right. Now, I said earlier the best trade on OCN sell. You can see we have OCN sell, CAD yen sell, Euro yen, and we have pound OC buy, Euro OC buy. So we have 4 charts in Asia. I said this is in our radar: 2 sell, 2 buy, and another US market is on sell. Bitcoin on sell, and oil also on sell. But this is basically, we talk about those 5 charts on Asia. We said this is the best trade: CAD yen sell, OCN sell, pound OC buy, Euro OC buy. I'm watching the US market, because if we start selling off and maybe go long gold again, if we rally, this is maybe it's gonna keep going down. So I'm watching the Nasdaq 100. You can see if it's this rally, US oil, this is gonna go down, because the risk, when everybody's selling here, they need to buy something, so they're gonna move to the gold. You see, let me put we move tick by tick. You see, we hang around this area, we hang around this area in US. All right, so I took long. Let's try.
over the last 30 minutes in the implied open for the Dow Jones, only off about 300 points at this point, with the Nasdaq down around 60. Federal Reserve Chair Jay Powell will warn of the downside risks to the economy posed by the new Omicron variant. Powell's remarks were released by the central bank ahead of his testimony before a Senate Banking Committee later today. Stubbornly high inflation and the impact of the new variant are expected to be front and center at the meeting.
Right, Europeans face increased financial polarization as inflation fears motivate efforts to improve financial resilience. That's according to Intrum. I think that kind of means we're saving more because we're terrified, which publishes its annual European Consumer Payment Report later today. Let's ask Anders Engdahl exactly what it means, President and CEO of Intrum. Anders, nice to see you again, sir. Thank you very much indeed for joining us. Well, look, here it is. More savings, less spending, more debt repayment, more economic insecurity as well. That's my assumption. But what does it mean to you, sir?
Good morning. As you said, the report this year again shows the continued divide amongst European consumers, where 2/3 of consumers are actually better off on the back of the pandemic and have been able to increase their savings significantly. We've seen the savings rates gone up a lot over the last 18 months. At the same time, we continue to see 1/3 of consumers being worse off and continuing to struggle with payments. I think what's new in this report is also the fear of inflation starting to kick in amongst European consumers, and 70% of respondents in our survey are fearing that inflation will eat out of their disposable income over the coming years. So I think that's an important trend coming out of this.
I do very few things stunningly sensibly, but one I do is never leave a balance on a credit card, Anders, as well. And I've noticed that one or two of the credit card companies are upping their rates as well. That's a very interesting tactic at this moment in time from some of the card companies. Are they worried that people are just not, they're being slightly more responsible? They're not leaving balances on cards that could be 20, 25% interest rates?
No, you're right. I think over the last 18 months, as we have seen, the utilization of consumer credit has gone down as people have actually spent more money on reducing balances and repaying also older debts. We've seen that also in our own business in terms of performance on older credits. I think that we are expecting, though, that as we are going into a post-pandemic world, that we will see more normalization and utilization of consumer behavior going back to some more normal behavior, but I think we're still some way onto that path of normalization.
Can I ask you, Anders, where the impact has been most felt at this point? We had a financial crisis in 2008, which we know did an awful lot of damage to a lot of Southern European economies, and we hoped that in the 10 years before we've had this pandemic, the governments and those countries would have done a lot to heal their economies and make them more robust and more resilient. How have they fared in your survey?
You're right. I think the Southern European economies have done a lot of work to heal after the financial crisis in 2008 or 2009. I think then again, looking at what the results of the survey, we also see that the Southern European and the Eastern European markets are the ones that have been impacted the most from the pandemic in terms of financial well-being amongst consumers. At the same time, it's also those markets where I think the inflation fears are the highest, and the Southern European markets are particularly vulnerable because if you look at the Eastern European countries, also seeing significant wage inflation coming through, offsetting some of that CPI increases, but in the Southern European markets in particular, that's not the case, and you continue to have more slack in the labor market, and therefore it's not translating into wage growth. So that contraction was expected to come through also over the coming months and quarters.
I suppose this is more a policy question and maybe outside of your wheelhouse, but at a time when the European Central Bank has expanded its balance sheet by trillions to provide support for European economies, why are we still seeing people left behind? Why are we still worrying about the consequences of a debt crisis for Europe?
It's an interesting one. You're absolutely right. I think the policy response, both monetary and fiscal policy response that we have seen as a consequence and or as measures taken weather the crisis. It has meant that the total NPL formation during this period has not gone up. In fact, as you said, the repayment and the savings have gone up significantly. Then, at the same time, coming out of the crisis, we are expecting, as those policy responses are normalizing and withdrawn, that we are seeing an increase. So we are expecting an increase in NPL formation in the coming year or two. And in particular, as this survey shows, in particular the third of more vulnerable consumers and the ones with less that are worse off after the crisis and with less buffers in their personal financials are the most vulnerable and most likely to end up in financial difficulties. So I think that will we are expecting that to play out. But I think the policy response that you're referring to has really helped to make sure it hasn't become an even bigger problem, and also has delayed the impact during the worst part of this period.
I do wonder, though, Andres, about the long grass strategy, but we'll talk about this on many more occasions. Thank you so much indeed for bringing us your report today. Anders Engdahl, who is the President and CEO at Intrum. It's going to be another exciting session. Roller coaster continues. I think that's fair to say. We are down 75 points on the FTSE futures, 193 points on the DAX futures. The CAC 40 faring the worst at the moment, though, seen down 1.4%. But we've got plenty of time before the European market open, and we'll talk you through it as we get nearer.
Okay, it's time to go higher now because NQ100 is going down. There you go. How come today it looks like the broker playing game with the spread? They're starting widening the spread little bit around London. It's crazy. $200 in 1 minute will be $50.21 in this before you blink. Unbelievable.
Right, let's take a look at European futures, which are tracking Asian equities into the red, whilst US futures have also turned negative. This after the Moderna CEO, Stefan Bancel, questioned the power of vaccines against the new Omicron variant.
Given the large number of mutations, it is highly possible that the efficacy of the vaccine, all of them, is going down.
Vaccine rollouts accelerate, though, with the UK offering booster jabs to anyone over 18, whilst the RDIF chief Kirill Dmitriev tells Jeff and myself that the Sputnik vaccine is more effective against the variants than its mRNA rivals.
Just in case, in the likely case, we need a modification, the process of modification has already started that would enable us to provide 100 million of doses of modified vaccine again if needed already by the end of February.
Volvo Cars posts a 17% fall in sales in the third quarter amid pandemic-induced supply shortages, but the CEO tells this show production is picking up.
Production losses will go through all the way to the retailers, but it is an improving trend, so that's positive. But that's of course subject to what could happen with this new virus variant.
And losses at Scandinavian airline group SAS narrow in the fourth quarter, but the group does warn it's just too soon to know the full impact of the variant spread. Anko van der Werf is the CEO and will join us in a moment's time. Okay, let's have a look. We're all now having a look at these US futures. So we had the big downtick on Friday, the rally, which wasn't across the board yesterday in the US. And now we are seeing, well, with some substantial declines, 1% on the Dow so far. The NASDAQ down 97 points. The S&P cooled down 44 points. US Treasury yields, what is it, 146 last time I looked? 145 now on the 10-year paper, 0.48 on the 2-year, and on the 30-year note, which was knocking on the door of 2% a couple of, well, a week or so ago, now 1.82. Asian indices. The ASX was in positive territory last time we looked. The Shanghai Composite and the Shenzhen, the mainland Chinese markets, around the flat line. The Hang Seng down 1.8%, the Nikkei 1.6% lower. And I'll just finish off on the European futures, which are in negative territory. FTSE down around about 90 points, Xetra DAX down 1.2%, and the CAC 40 down 1.6%.
So crude prices have also turned negative this morning amid renewed Omicron uncertainty over rallying, or rather after rallying from their biggest one-day drop since April of last year. The US energy envoy, Amos Hochstein, has told CNBC it's too early to say what Omicron means for the markets.
Okay, guys. First trade we did 504, second trade we did 333. So 838 today. So this will put us 17,832 for the month. All right, guys. And remember when we open account with GH was $1,000. Now is 1,030. Right now, 1,030, so it's up $30. We're just gonna keep watching the EA. They only looking for a big candle like this, and they go in and out very quickly. So if they see small, the EA, if they see small candle, he's not interested. He is only looking for something big like that. So he jump in very quickly and he exits very quickly, okay? So let's watch. And I guess he's not taking so many trade because the spread here, because it's a demo, is not the like live account. Remember, this is just a test on demo for 3 expert. So I guess also the spread is bigger here in this broker, but we will keep watching, okay? So in Forex market, we'll be focused on Pound OC, Euro OC, OCN. Oh, by the way, remember on Asia, I said we have offer around 114 and we have a bid around 113. We drop almost 100 pip on dollar yen. Like I put those two line in Asia 6 hours ago, and you can see 114 has been holding for last 24 hours. We have some bid around 113. Let's watch if is this price hold or not. Let me check very quick if they have any update. Just be I want to see if they any new update. China Health. They said 20% of age 60 is not vaccinated yet. So it's about 20% of the people over 60. They refuse to take the vaccination on China. Okay. Now the option I will post it here for you in case if somebody interested to trade the euro dollar, dollar yen. I will post it on the chat. But let me look very quickly. Dollar yen today is, it's between 113 and 114 today. Tomorrow 114. So 114 is very important. On Thursday 112, 113, 114, 115. So for today, so far, like this two level, and we maybe go down to 1250. So if we break 113, we can see 1250 very quickly. $12.50. And if we break 1400, we maybe see 1450. Okay, so just watch those line when the price around it, because if we break one level, we were going to the second level quickly. Like you see, I said 114, now is 113, and we have this two line in Asia. So, but I will post in case if somebody need to trade euro dollar or dollar franc, dollar CAD, whatever you like, you can just look and see what's going on. All right, guys, and where is the chat? There you go. All right, so here is the screenshot for option on the chat, and I'll be around on the chat room if you guys have any questions. Thank you guys, and talk to you later. I will post my trade on the chat room. Take care, guys. I'll see you tomorrow.